Good afternoon, everyone. Thank you so much for coming on this very lovely sunny day. I'm very pleased to be joined by my colleagues, Markus Pimpl, who is a Managing Director and Co-Head of Private Wealth at Partners Group, and Vincent, who is the Global Head of Funds at Euroclear, and myself, David Genn, CEO of Goji, and we were acquired by Euroclear at the end of last year. And together we're going to be speaking to you about a topic that is very much in the press at the moment, which is the rise of private markets as an asset class. And we're going to be talking to you this morning about the real need for there to be financial market infrastructure to support investors and distributors as they access this asset class and do so in an efficient and scalable way. So I'm going to hand over to Markus in a moment, who is going to talk to us about these issues from an asset management perspective. I will then talk to you about some of the technology and operational issues that the industry faces. And then Vincent will finish off by looking at it from Euroclear's perspective as a world-leading financial market infrastructure provider. So thank you very much.
David, many thanks for the introduction and also a warm welcome from my side. As you have heard, my name is Markus Pimpl. I'm with Partners Group. Probably most of you are familiar with Partners Group as a pure private markets asset manager. We're managing around 135 billion in private markets assets, meaning in assets that are not listed at a stock exchange. And why am I here today? Because these two gentlemen are solving a huge issue, or if not to say problem for me, that I'm facing for quite some time by now. What do I mean with that? And I brought you a few slides that are supposed to illustrate a bit what my challenge is and what I'm facing. So first of all, I'm active in private markets, and I like to consider this asset class as the new traditional asset class. What do I mean with that? Every pension fund, every insurance company, every institutional investor has allocation to private markets, to private equity, to private infrastructure, to private real estate, to private debt. And this market is growing structurally. We have seen in the last 2 decades that assets under management in private markets tripled every decade. And this is also what we're expecting in the next 10 years to come. And one of the key drivers for that will be the private wealth space, meaning private individuals that follow institutional investors in their portfolio allocations towards private markets. Why is that the case? Over there. Because it's simply beneficial. If we look at a portfolio that you include private markets too, you see that the portfolio efficiency goes up, meaning you diversify your portfolio, you have a lower volatility, you have access to new return sources. And as you can imagine, this is beneficial for institutional investors, and it's equally attractive for private individuals. And it's not only the portfolio where it's making a lot of sense to have private markets, it's also about an additional aspect that is mostly forgotten, and this is what you see on the next slide, the opportunity set. If you think about public markets and private markets, you have to acknowledge that the opportunity set is shifting. When I started my career, and I started my career in public equity trading, we had double as much listed companies in the US as we have them today. To be concrete, in '96, we had more than 8,000 listed companies at the US stock exchanges. Today, we only have 4,000. And this is also interesting if you look at it from a different perspective, which is how many listed companies do you have these days in comparison to privately held companies, so the companies that we are investing in when we do private equity investments. And this is a totally different magnitude. We're talking about 4,000 listed companies compared to over 1 million of privately held companies that could be potentially in our scope. So it's all about opportunity set, diversification, and new access to new return drivers. And why is this so important now in our context, how we meet today? It's simply because what I'm doing is I'm providing solution to private individuals to access private markets in an institutional, efficient way. So Partners Group has been pioneer in providing semi-liquid programs, meaning programs where you have access to private markets, but with a defined liquidity since more than 20 years. We were pioneers in launching ELTIF funds, European Long-Term Investment Funds, which are now giving us access to private individuals across Europe, and they are also sold in Switzerland. And with that, I have the tools at hand to provide private markets to private individuals at a broader scale. And this is often considered the democratization of private markets. And to be open with you and frank, I don't like the phrase democratization of private markets because it's a regulator giving us access to the private individuals. This is what we see with ELTIFs and with other fund structures that are allowing already for distribution to private individuals. But my biggest problem has been settlement and operations. I spoke to probably all larger banks in Europe over the last decade and asked them if they would be interested to distribute private markets to their clients. And the typical reaction is that they all like it. They say, it's fantastic, we want to do that. But once they started due diligence, looked at our programs and liked them, they said, we have a problem to settle it. Typical banking, predominantly banking systems are designed for public equity, for bonds, for certificates, but they are not designed for more complex private markets programs, capital calls, distributions that are happening over the lifetime of a fund. And this is why I lost probably the vast majority of my prospects. And this is what is changing now, and this is why we're all together here, because now we have a solution. There is a way to scale and to make this efficient. What do I mean with scale? And I think we'll talk about it a little later. If a large bank in Switzerland or in Germany, France, name it, is bringing in private individuals, we are not talking about 50 LPs or 100 LPs that you typically have in a private markets fund. It's about thousands of investors that typically would enter such a fund. It's like a mutual fund at the end of the day. This is where we need to get to. And this is where you need technology and where you need solutions and where you need a partner that understands private markets. Because this is also quite shocking, and I'm speaking out of experience, that even though you have maybe solutions around, but you need a solution provider that speaks the same language, that understands what sort of corporate actions are happening over the lifetime of an illiquid, closed-ended private markets fund. And this is, again, why we are here, and this is what I quickly wanted to share with you, that there is a substantial need in the industry to mutualize also private markets, and that by now we have a solution which we take a closer look at now. And of course, if you have questions, I think there's a Q&A later on where we can then discuss also the details about it.
Great, thank you, Markus. So I think the demand for private markets is clear, and I think is becoming increasingly, as Markus says, the new traditional asset class. It's featuring in the portfolios of a whole variety of investors. And so the real problem that Markus has mentioned and that investors and distributors face as well are that the operational challenges are really hindering access to this particular asset class. And this makes sense if you look at the history of private equity and private markets as a whole. All of the processes, the operational models, they've all been geared around a very small number of institutional investors. So if we're going to really scale access to this asset class and do that in a way that is core to the operating models of banks, custodians, and wealth managers, then we really need to look at how we can use technology to help solve some of these problems. And regardless of the size of distributor, intermediary, or investor, there are a number of themes that keep coming up when you talk to them about the kind of problems they face when investing into private markets. Very often, the KYC and AML processes for these kinds of funds are geared around onboarding a small number of pension funds. They're not set up to onboard much larger numbers of individual investors or bank nominees and their underlying clients. Investor suitability in complying with MiFID and AFMD and other distribution rules around the world are increasingly complex when you broaden the range of investors that you want to distribute to. And investors are increasingly demanding a digital journey. They don't want their private markets portfolio to be sat on the side of the bulk of their portfolio. They don't want to be receiving reporting via emails with PDF attachments. They want to be able to get a holistic view of their portfolio. And reporting can be a real challenge as well because there's less standardization around the way that different asset managers report, and so it can be very difficult to compare positions across different funds and to really understand your exposure, let alone compare that to your other more liquid investments. And market neutrality is a real issue as well. Distributors want to be able to access whichever fund makes most sense to them, and they don't want to be limited or tied down by the funds that they can access because of operational limitations. And I guess underpinning all of this is the operating model. At the moment, if you are a bank investing into private markets, the operating model sits on the side. It's not a core operating model that's integrated with the way that you settle mutual funds or any other kind of security. It very often requires specialist manual teams that make it very inefficient and expensive to scale to the number of investors that you want to serve or the number of funds that you want to access. And what we've seen is that as distributors and intermediaries have become more interested in private markets, that the operating models that they have adopted have grown over time as well. This is obviously a very complicated topic, but really what I want to do is kind of sketch the landscape here so that we can start to get a flavour and explore it in more depth. So if I really simplify things, there are broadly three flavors of operating model. The first is what you might call the investor club. So this would be where you might have a wealth manager that has, or a multifamily office that has a small number of high net worth investors that they want to give access to a select number of investment opportunities. And in this particular case, you're effectively treating these smaller investors as quasi-institutional investors. They will be treated as professional investors or up-top professional investors. They will very often go through the same manual processes and KYC procedures as you would with an institutional investor. And so the real ability to scale this is very limited. The number of investors you can serve is limited, and the range of investment options that you can give them is limited. And there's typically very little use of technology. You might have a website to kind of to promote the fact that these opportunities exist, but there'll be very little digitization of the underlying operating model itself. The second kind of evolution that we've seen is like a private markets platform, so where you would have a wealth manager that wants to offer a series of private market investments to its clients. They'd be looking to serve a wider range of their high net worth clients, and they want to be able to offer a wider range of investments so that over time they can build a diversified portfolio. And so at this point you might start to involve a bit more technology, and I'll talk a bit more about this on the next slide. But really where we want to be getting to is a genuine private markets network, a genuine financial infrastructure that facilitates investment into private funds. Because even in a private markets platform where you might be offering private market investment opportunities to a wider range of investments, the operating models are still very much on the side. They're very much an add-on to the core processes. Where we really want to get to is that investing into a private market fund follows as much as possible the same operating models, the same settlement processes as an investment into a mutual fund. And as Markus mentioned, there are always going to be characteristics about these funds that are different from mutual funds. They're going to have capital calls, they're going to have distributions, they will be more illiquid, there won't be the ability to redeem in quite the same way, and that's part of what's attractive about the asset class. They'll always be restricted to a certain group of investors. But the core, if we can get the core investment operations on a par with what banks enjoy for mutual funds, then that really throws open the doors for wealth managers, private banks, and other distributors to focus on which funds are right for our clients, what's the right portfolio allocation, rather than how on earth am I going to give my clients access to these kinds of funds. And anecdotally, I was speaking to one asset manager a few weeks ago who said that in the sales conversations they have with investors, half of the conversations are around the mechanics. How on earth are we going to access this fund? Not whether this is the right fund to offer to their clients or what the benefits would be. It's all around how on earth do we make this work? And so as you move from the kind of the more simplistic investor club right up to a private markets network, we can see that this really enables us to scale the number of investors that we can serve and the kind of funds that we can serve. So with an investor club, you're typically really limited to the number of clients you can onboard because it's a manual process, but also they're typically accessing very traditional LPGP type fund structures, and so they need to be sophisticated enough to cope with that. But the subscription processes are all manual, the custody processes are all manual, the subscription processes are all manual. It's very difficult to scale these, and there's certainly no integration with a core banking platform or the core systems of the intermediary. As we move to a private markets platform, typically the scale that the intermediary is operating at is more like hundreds of investors, maybe into the low thousands, and so the number of funds that they will give them access to is really limited by how many they are willing to cope with doing due diligence on and coping with the more manual processes that come from that. But you start to see investor onboarding being digitized. You might see the subscription documents being digitized so that from the investor point of view, things appear a bit more digital. But then really when it hits the back office, we're still very manual. We're still potentially faxing subdocs. We're maybe emailing them, but the custody is still manual. The settlement processes are still manual. And it's very difficult to integrate these processes into the core banking platforms. And so as we think about a private markets network, which Vincent's going to talk to us more about what we're envisioning at Euroclear, we really move to using the core custody and settlement flows that are already in place for mutual funds. So how can we really operationalize and reuse the SWIFT messaging, the settlement and custody flows that are in place for mutual funds and make that work for private funds? So how can we combine the digitization of a private markets platform, so digitizing the investor onboarding, the way investors subscribe to the funds and place their orders, and then combine that with the core custody and settlement capabilities that already exist? And if we're to move towards that kind of an infrastructure, there are a number of pain points that we're going to need to overcome, because really what we want to do is to get to straight-through processing for private funds in the same way that we have them at the moment for mutual funds. So at the moment, asset managers have a real problem with connecting to distributors and doing that in an efficient digital way. And distributors and investors have a real problem accessing those asset managers because they are the other side of the equation. And a lot of the real complexity sits with the transfer agency and sits with the fund administrators. Now, these are firms that are really geared up to deal with institutional investors, and we need to provide technology and piping that makes it really efficient for us to route the orders from the investors to the fund administrators that are operating on behalf of the asset managers. And that's really what we're envisioning with building financial market infrastructure for private funds. and I will hand you over to Vincent.
Thanks, David and Markus. So I'm Vincent Claus, so leading the business development and strategy of the funds business at Euroclear, and I will continue a bit the story that Markus and David explained to give you the reason why at Euroclear we are very excited about that journey on the private market funds. As you're probably aware, we define ourselves Euroclear as a financial market infrastructure, and our purpose is to connect the financial players to bring safety and efficiency and enable growth. And we do that in our DNA since ages on the public securities like the equities, the bonds and the mutual funds. And last year we decided to enter into the private market funds, because the private market funds has exactly the same features that we have been facing 30 years ago when we were launching our services for the listed securities, in the sense that, as explained by Markus and David, we see the private funds as a massive market which is under transformation. But there is a completely lack of operational efficiencies. And so that's really what a financial marketing infrastructure does in life. The second element that was also a key driver is that Markus explained the need of partners group, but all of our customers, be it the wealth manager, the global custodian, and also the fund admin and the transfer agent, and as well the asset manager that we are dealing with on the mutual funds, we are asking a player like ourselves to play a role in the market funds. And one of the third reasons as well, we also see a big potential to play a role there, is that the regulatory framework is also supporting the growth of the private market funds. So it's not any longer a bespoke asset class that it's specific to a few investors. The fact that there is a regulatory push gives us really ambition on the fact that it's a market on the growth. And so on that basis, the role that we, Euroclear, believe have to play in combination with the technology angle that Koji will bring is that we will push directly a massive network of players. You're probably aware, but we handle roughly 36 trillion of assets at Euroclear, and we have all the global and international investors connected to our platform. And so in that regard, for the asset manager who wants to ease and increase the access to the private market funds, we have most of the demand in a sense. So that's one element that we bring, a strong network of counterpart. Secondly, the fact that we are already active on the mutual funds, as David alluded to, we have the technical foundation. We have already most of the players connected to our funds platform, and the idea will be to complement a module on the private funds, which will be able to cope with the specificities of the private funds. But therefore, for our customers, it will be an additional module, and there is no customer journey to be amended. The third element as well is it's a lot about operational efficiency and settlement, as my boss colleague mentioned, but that's typically what Euroclear is aimed for, and this is what we do for all our investment. And we also have the leverage to bring a level of standardization. Because one of the key challenges is not only connecting the different players to a platform, it's also gradually, once we're going to have build a critical mass, is to kind of impose some standard messages and so forth that will bring the efficiency, as we note on the mutual fund, and therefore, as was discussed, it's going to be the operational should not be a factor of investment decision for the players. And last but not least, also to give a bit the long-term perspective, is that once we will have the private market funds handled into the market infrastructure, it will ease one of the pain points as well on the market, which is the liquidity. So we also have the ambitions that one, we're going to have much more investor and counterparts on our network, having a secondary market where people can exchange the private equity units will be much easier than today. And so against that background, and that's a bit the final words of our presentation, we really have the ambition to create that kind of seamless and fully integrated digital journey from the fund admin to the distributor, going through the asset manager. And as was mentioned, it's really about bringing the digitalization to ease the access and bring the efficiency that most of the market players are asking for at the moment. So that's ending a bit our presentation. I believe that we...
Vincent, maybe one more word from my side. So as you now have heard, there's an end-to-end integration, digitalization. It's about scalability of this, let's say, rather cumbersome private market fund processing. Before we partnered, I looked at around 40 so-called fintechs, did my due diligence, because it's a bit flavor of the month, showing digital solutions in this regard. But what I've often seen are fancy front ends. The front end is probably the easy part, but it's more about the engine room. And this is an important thing, to have someone with an existing engine room that understands the mechanics and can do the end-to-end connection. That's one thing. The other thing is, I'm working with all the large names in Europe. If I bring them a partner that is maybe a fintech, a small company, a startup, a large bank tells me, you know what, will they exist in 4 years? And this is why I was super pleased to see that Genn and Euroclear are now one team, because he's a massive backbone of resources, of experience that is backing this newer, let's say, ways to settle and handle private market funds, which is for me a huge differentiator, and I'm not carrying the risk of a fintech that might not exist in 2 years anymore. With that, I hand it over to you again.
Thank you.
Thank you. Are there any questions?
Obviously, there are other aspects to private equity funds or private market funds, meaning in terms of commitments and so on, that are quite different from regular listed funds or simple funds that we invest into. How do you tackle that aspect with your platform?
So the question was, how does the platform handle the differences in private funds compared to mutual funds? So you're absolutely right. There are a number of core differences between a closed-ended fund and a more traditional mutual fund. And what we're looking to do here is combine Goji's technology, which is designed just for private funds, with the core custody and settlement capabilities of Euroclear, which is designed and has been operating in mutual funds for more than a decade. So our platform, which is being integrated completely into Fund Settle, so it will become part of the Fund Settle journey, will onboard investors and then enable us to digitally complete the subscription document. So you're no longer having to manually fill in a 50-page subscription document. This is completed automatically and then signed with electronic signatures and then sent through to the fund administrator digitally. And then for capital calls, we receive those notifications from the fund administrator, and that's presented to the distributor or the investor, and they're able to settle that using the Euroclear banking infrastructure. So whether that be via Swift or via a browser-based interface, so they can use the existing bank account setup and settlement infrastructure that's in place.
I understand that the relationship between Goji and Euroclear is still early days. So what is the timeline, in terms of really implementing, scaling up these services? How proven is the operating model? And maybe last question, in the way investors are going to be subscribing, you are still counting on a distributor bank to be the middle man, or are clients going to be registered directly on your platform?
So the question was regarding when is this service going to be live as part of Euroclear, and will that change the relationship of intermediaries into the fund, or will the direct investor have to sign up. So to kind of take that backwards, the feedback that we get from the market is that the largest custodians are being asked by their clients to administer these kinds of funds, all the way through to private banks and wealth managers wanting to be able to offer this to their high net worth investors. So I think regardless of the size of investor, the use of an intermediary is here to stay. And I think that can offer some real benefits to the end client. And so we will continue to support that. We have quite a flexible model that allows both the distributor and the end investor to have access to the platform, access to reporting, et cetera, et cetera. But I think our goal really is to make it easy for the intermediaries to offer these funds to their clients. In terms of the timelines for this service being available, we're going live with the first clients in this service at the end of the year.
Maybe to add to the question, is it B2C or is it B2B? So for me, this is crucial that this is a B2B approach. There were also quite a number of platforms or fintechs that approach the market with B2C aspects. Where I personally have a bit my doubt, simply because, again, democratization of private markets, you can only sell to professional investors. Such a platform cannot reach out to individuals, and as a bank could do or a distribution partner. And today, still 99.5 or 9%, whatever, is still banked. And out of personal experience, I can tell you, if you are a private individual, to make a 10-year commitment in a private equity fund, you typically want to get a bit of a feeling about the GP, who's behind it. You want to maybe even speak to the manager. And this is why my decision to partner with Goji, to work with Euroclear, is also massively backed by the B2B character of it, because this is all about making private market funds feel like mutual funds. This is a vision I personally having, I think we all three have here on the panel, and this is a way also to accommodate the growth we are seeing over the next decades or even years to come.
At the back.
All the large banks have very established relationships with very large custodians. Is the idea to have these large custodians become part of this network, or is it a separate new business relationship?
Yeah. Maybe I can take that question, because it's a very good question. And already nowadays, in the way we do handle mutual funds, we have the custodian between the investor himself and the platform that we have. So the idea for the private market fund is to replicate that model. Is that either we can have a distributor or an investor connecting directly to our platform, or if we have a big sovereign funds or institutional that use custodians, we give the mean to the global custodian to offer the services on a white label basis. It's also we talk about fronting, and we have the settlement capabilities that can go through the custodian, but also all the tooling that will be developed will be available to the custodians for the benefit of their underlying clients. So the idea is not to go directly after the customer of the custodian, but we have the possibility, of course, to have them indirect.
Maybe I got the question wrong, but wasn't the question also in a direction, do I need to become a separate Goji client if I'm already fund settle client?
Yeah.
Yeah. And I don't know, this is something new.
So in terms of access, it's going to be a Euroclear offering where either, yes, a customers can have the capabilities to connect to Euroclear and fund settle, but Goji, as a smaller entity, with admission criteria a bit looser than Euroclear, because becoming a customer of Euroclear cannot be simple for all kind of profile, but we can have the possibility to onboard smaller customer directly via Goji, if the access to the Euroclear infrastructure is a bit more complex to complement that. Yeah.
So the way you guys are building this platform, it seems like there are going to be some synergies resulting from economies of scale. So is that going to be reflected on the fee structure for the investors?
So the question was, will will this service give economies of scale, and will that be reflected in the fee structure? I think it definitely will bring economies of scale. Just the scale that Euroclear operate, the use of technology and being able to reuse existing operating models will obviously benefit everyone in the chain. And our hope really is that this will end up in value being passed on to the end investor and enable, and I think that will materialize in a number of different ways. I think one of the key things is, a lot of the existing structures where feeder funds are set up or some kind of intermediary vehicle, that's expensive, and therefore limits the number of funds that an intermediary can offer to their end client. So the manual operating models impacts investors both in terms of the breadth of diversification they can get as well as the fees they pay, and we believe both will be improved for the end investor.
So do you have any idea, like, by what ratio those fees will be, like, lower compared to the...
So we're still working out what that fee structure will be, and so that's something that we'll bring to market when we can.
Well, we can give a range of magnitude. Usually we estimate that an access of a feeder fund for the investors is in the range of 20 to 30 basis points. With our new solution, we obviously expect to capture a value. We don't want to do it for free, but the overall cost will be a fraction of the 20 to 30 basis points. Probably 30% of that 20 to 30 basis points I'm referring to, just to give a range of magnitude without being precise.
Any other questions? Okay, thank you all very much for your time, and looking forward to speaking to you afterwards.